What's going on, guys? Ches Critta. So the economy, the data that's coming out is not good at all. There are a couple of very large indicators that I've been following that are pointing towards negative growth. Negative growth, of course, is defined by recession. So the manufacturing MSI index recently dropped below 50. Now, below 50 usually signifies the fact that we are going into recession. In Europe, it's pretty much guaranteed that they're going to be in recession before long, and their index has dropped faster than ours. Now, there's a lot of stuff going on, tumultuations in the markets. Markets go up, markets go down. You know, you see it, and a lot of people look at the Dow and they go, oh, well, you know, Dow's still up, everything's going fine. Well, the euro, the European Union, well, the ECB, first of all, this week they cut rates. Now, that's not really the big news story. The big news story is China surprisingly cut rates. Now, remember, they're an economy that is entirely centrally planned. Okay, there's very few people at the top that look at everything. They control everything. Why is this important? This is important because China's growth is expected to be at the lowest level in, I think, about 6 years. So this is pre-recession levels. Now, they've got a property bubble that is on the verge of, if not bursting right now. And if they don't keep growth going, they're going to be in deep, deep trouble. Now, China, it's... this is interesting. So China, basically, when they have an uprising in China, they pretty much stomp it out. But they have several different types of uprisings. So they'll have like a food uprising. People protest about food prices. The Chinese are pretty good about this. I mean, they really are. They'll go out there and they'll say, they'll crush the rebellion and say, all right, look, we'll give you guys food. Stop rioting. But when people come out into the streets for freedom, and they come out and say, hey, now we want more freedom, they mercilessly just hammer them down and say, no, you will get none of that. I'm sorry. Sounds almost USA-esque, huh? Anyways, I digress. The euro, you are seeing exactly what happens when stimulus starts to fail. Stimulus is failing. All right, the global economies, the quote-unquote developed countries, the U.S., most of the Eurozone, they are now running on stimulus, i.e. printed money. Money that is not paid with taxes, money that comes out of debt to their central banks, which, again, it's never going to be paid back. So for all intents and purposes, it is printed money. And this is one of the reasons why corporate profits are as high as they are, and the reason why the stock market is as high as it is. It's the fact that this money is going out there, but it's not hitting the guy in the street. It's hitting the corporations. And remember, now, not going to let any banks fail. No, we can't have that. That would be a nightmare. But, Ches Critta, well, he can fail. I mean, he's nobody. Plus, we don't like his message, right? So, the euro, I'm pretty sure it's on its last legs, because they're just going to demand more and more and more. And eventually, at some point, Germany is going to say, you know what, we've had enough of this. We're not going to do this anymore. The problem with that is if China goes down, Germany is going to take a huge hit. And Germany is the pillar of stability within the euro. And you say, Ches Critta, why is that important? Well, if the euro goes down, so goes America. Okay, we get about 3% of our GDP from the Eurozone. Okay, we get about, way more than that in terms of stimulus, printed money from the government as far as deficits go. So we're talking like what? What would you get? Like maybe a 6, 7, 8% contraction in GDP if this scenario plays out, which eventually it will. It might not play out exactly, in the next 6 months, a year. They might come up with a fix. I mean, they've been pretty crafty so far. But the point is that eventually this will happen and the implosion will occur. Now, I believe at this point it could still go deflationary, but my gut tells me it's going to go inflationary in the end. Maybe a whipsaw type event will happen, and the banks love this kind of action. Now, this brings me to something else. Yeah, as far as the markets go, I got in a little bit of a debate with Robbie G, who's pretty much heavily involved in the markets. He's a day trader, and we're talking about high-frequency trading and the myths, or supposed myths, that are out there about it. Now, he says he has first-hand knowledge on this, but I was watching a Chris Martenson interview and decided to do some follow-up info on this. or follow-up investigations. Now, this is a fact, they are laying a fiber optic cable from the trading pits at the NASDAQ in New York to a warehouse in New Jersey, where they are going to host what's called like a data farm, like racks and racks of servers, filling entire warehouses for high frequency trading. And you say, well, okay, that makes sense. They got to run this data cable. You know what the benefit of this cable is? 3 milliseconds, 3/1000ths of a second, and people are paying through the nose for it. Why? Because that's huge. In terms of front-running every single trade in the markets, that's huge. And they did confirm that, yes, about 50 to 70% of all trades in the market are these high-frequency trades. Now, they also went on, and I'll post a link to the interview below. They went on to talk about the flash crash. And basically what happened is there was a lack of... what did they say? It was a lack of verifiable data in the markets that caused the entire flash crash. Because if we remember, it was a pretty mundane trading day. I was watching the markets live at the time, and everything was ticking along. I think the market was down, and all of a sudden it just fell off a cliff. Well, why did this happen? And this gentleman that he was interviewing, he basically said that what happened is all of a sudden the data became unverifiable. So these computers, remember, they work in algorithms that trade in and out and in and out. And this is the best explanation I've heard of this. They said that basically what happened is once the data was uncertain, some of the computers froze up. Now the people that ran these computers, they basically said, all right, you know what? Offline. Control-Alt-Delete, we're going to cut it. And they did that. And at a similar time, I believe a order to sell for about 35,000 E-mini contracts of S&P 500s came through the pipeline, and it ticked the market down rapidly. Well, the initial reaction of all these computers was to sell. And ETFs that were trading at $50 traded down to 1 penny. And, they couldn't go sub 1 penny. That's like as low as they could go. It was inconceivable at the time that this would happen. Now, so what are we doing? Whatever came of that? You remember how fast that got buried under the carpet? Well, yeah, because, these people buy politicians' chess credit. Exactly, you are right. Yes, they do. So, are we regulating it, looking at... No. We're going to spend $300 million, almost $750 million, to run a fiber optic cable from the trading pits of New York to New Jersey to make sure we can do even more of this stuff. Isn't that great? So, this is just the breakdown, as it goes. It's criminals, they get the right to basically do what they want. As long as you have enough money and you can pay for it. You can buy yourself a couple politicians. Yeah, why not? It's like the drone lobby in Congress. Yeah, there is a drone lobby in Congress. Yes, that's right. And you know what they do? They go to these guys, I don't know how many's on the panel, like 13, 10, something like that. And they go, okay, well, here's a, 150,000 for you, 150,000 for you. Oh, and the chairman of the committee, here's $250,000. Now, I'm not just giving you that money. That's for your next campaign. Right, guys? But yeah. And all of a sudden, the most important thing on the table, drones in the skies of America, it's for our safety. And the dudes at Raytheon are just freaking cracking up. And that's the sad state of affairs. Now, I've gotten off track, but the economic update. So, basically, as the stimulus starts to lose its effectiveness, which we are seeing in the Eurozone, it hasn't necessarily happened in China yet. It hasn't necessarily happened in the U.S. Because people tend to be holding dollars worldwide. I think I read that printed currency in the U.S. is somewhere between $800 billion and $1.2 trillion. Now, that's printed currency. If there was ever a situation where the electronic system just got all buggered up and went down, that's not much currency for the average person. And if you think, well, it sounds like a lot. Yeah, it might be 300 million Americans, 1.2 trillion at the high end. 60 to 70% of those dollars are held overseas. So, what's that tell you? And, again, my theory on this is when inflation even starts to show the slightest inkling of going over 5 to 10%, somewhere in that range, You're going to have a crisis in confidence. When that crisis in confidence happens, that 50 to 70% of dollars is going to come pouring back in. And not to mention the electronic currency with how fast transactions happen, I think it could be a rapid implosion. But we will see. Stay tuned. Stay tuned. Tension is rising in Europe, and people on the regular basis are rioting there. I mean, Greece is breaking down. And if China doesn't hit that target of 8% growth, if something happens and they drop to 5 or 6% growth, whether it's admitted or not, 1.3 billion people is a hell of a lot of people to control. All right, guys. Adios.